Hello, I'm Lara Cooper, your host of the Accelerator podcast. As always, the pun is intended. My name is in the middle of it. It's not that creative, but true to the word, our whole focus is to help you view your business like an investor would, to help you get the most out of your hard-earned resources, both your dollars and your time. Now, there's so many angles from which we can come at this topic from, but today we're going to be focusing on tax efficiency. More importantly, 10 questions that all business owners should be asking their CPA and why. And the simple answer to why is business and taxes are hard, too hard to be doing alone. And so here's what you should be asking the pros. Now, we're going to begin with tax law, business structure, and accounting software. So number one, what are the latest tax law changes that could impact my business? And the explanation behind that is that tax laws are constantly changing and evolving. So having an up-to-date understanding of any changes can help business owners better plan for their financial future. For example, the Employee Retention Tax Credit Program has changed 7 times since its inception in March of 2020, and it contains 1,300 pages of law, just this one program. And this tax code is designed to raise revenue for the federal and your respective state's government, and there are a myriad of ways for business owners to be tax efficient. A proactive CPA will educate you and help you proactively make the best financial decisions for your business goals. So number one, what are the latest tax law changes that can impact my business? It's a very open-ended question, but if your CPA, your business advisor, knows you, knows your business, and knows their tax law, they will be able to help you determine what applies to you. Question number 2, what type of business structure should I use for my business? And the background behind this is the type of business structure, the entity structure that you use has a huge impact on the amount of taxes that a business pays, and as a result is the business owner's liability. Choosing between sole proprietor, partnership, LLC, S Corp, C Corp are decisions that carry varying benefits and tax implications. And it's important to discuss this with an experienced CPA so the most beneficial structure for your business is chosen. I know on TikTok and social media right now, S Corps are a hot topic, and that seems to be the one-size-fits-all answer. But in all reality, the best entity structure for you depends on your goals and your business activity. It's not necessarily going to be an S Corp, and going for an S Corp when it's not the right fit can either lose you dollars in taxes or be a huge mistake that costs even more to unwind because it just wasn't thought through properly. So, second question, what's the best entity structure for my business? Third question, should I use an online accounting program for my business? Using an online system like QuickBooks Online or Xero can streamline and simplify the accounting process, hands down. It can also empower you, the business owner, with real-time visibility to key financial indicators in your business. A CPA can provide you advice and guidance on which program may be the best fit and how to use it to its fullest potential. Again, QuickBooks Online is not a one-size-fits-all. Although the tool is excellent and most of our clients are on it, how it's utilized is very different from client to client and industry to industry because each business is looking for different key pieces of information. And so it's not enough to just have your data in the books, it's to have your data in a meaningful way, have it reported in a meaningful way so that the story of the numbers that it's telling helps you make well-informed decisions rather than just sits there month over month and year over year. So, question number 3, which accounting system should I use and how can I utilize it to its full potential? Now, we're going to move on to a few questions around reporting, tax efficiency, and time-saving strategies. And this is going to be rapid fire, so you can pause, take notes, or just download the link and send this to your CPA, see what they have to say. So question number 4, what reporting requirements do I need to meet? Depending on the type of business and or the amount of revenue that you're pulling in, there might be different regulatory requirements that require reporting. This, I can say for a fact, depends on federal, state, even if you might have local taxes, county taxes, city taxes, and it depends on your industry. Telecom has a completely different set of reporting regulations. So ask your CPA because they will be able to provide advice and guidance on what you need to be compliant. Again, question number 4, what reporting requirements do I need to meet? This is the bare minimum as a business owner. It's being compliant. So question 5, and this is the fun one. This is the one everyone always asks. How can I reduce my taxes or be more tax efficient? Now, tax deductions and other strategies can be implemented to reduce the amount of taxes owed, either through deductions and or credits. And they are two different things. A proactive CPA advisor can provide advice and guidance on which deductions can be used and the most effective tax strategies for you, for your specific business and personal situation. Again, no two strategies are alike because your personal circumstances are different. And so the most important thing you can do is to meet regularly with your CPA to plan ahead. You'll save a lot of money in taxes, even after paying your CPA for their time, with proper tax planning and strategy. If you wait until tax season to start a conversation about tax efficiency with your CPA, it's way too late. The year is over. So there isn't much you can do to implement tax efficiency tips besides just implement them on the go forward. And so don't let this year pass you by. Talk to your CPA, have them assess your situation, and then act on that information to realize the benefits of that advice. And I hate to say this, but if your CPA waits to assess your situation until tax time, and fair warning, you should be asking for this as well, but if that's not the relationship that you have with them, it might be time to look for a more proactive advisor. Number 6, what are time-saving strategies related to my accounting? Utilizing automation, templates, and other time-saving strategies can save time and free up resources so you can focus on your business. And your time is valuable. Your energy is valuable. And so a CPA, a business advisor, can help provide guidance on which strategies should be used for the best results based on your goals and the nature of the business. You should look to your advisor for education on these strategies as well as for execution. Realistically, if you have the budget, offload the accounting because then you can have the peace of mind that not only is it being done at a regular cadence, you're getting high quality data. And garbage in, garbage out. You need high quality data to make well-informed decisions. Section 3, retirement plans and keeping a pulse on your financials. So question 7, what retirement plans can I set up for my business and how should I plan for my exit? And I love this conversation around exit planning because everyone exits for better or worse, whether they want to admit it or not. Either it's a natural disaster or COVID, sadly, put a lot of people out of business. And perhaps you might even end up being out of commission before you expect, or you're just burnt out and want to close the doors. You want to get the biggest return on investment for your business because you've spent so much effort on it. And so these are really two separate questions, but this will get the conversation started with your CPA. The retirement plans and planning for exit. So setting up a retirement plan for the business can provide both tax savings and savings for your future. And we're not talking about selling your business at this point. We're just talking about squirreling away the dollars in a tax efficient way. And a CPA can advise you on the best type of retirement plan for the business and what contributions can be made. Different business entity structures are eligible for different types of plans. So again, that's why that earlier question comes into play. So whether it's 401k, a Roth, profit sharing, or even a SEP, there's a lot of options that your CPA can review with you and help you analyze to achieve your retirement goals, as well as the goals you have for providing retirement benefits for your employees, your valued team members. And every business owner should have an exit plan, some point in time, you will be leaving your business. Again, whether it's planned or not, everyone exits, and a knowledgeable business advisor can help you build that exit plan, grow it, polish it, and help you exit with more money in your pocket to pursue the lifestyle you intended to. So question number 8, how often should I be reviewing my financials? Regular review of your financials helps ensure best business practices, compliance with regulations, and helps you identify potential problems. A CPA and business advisor should provide proactive guidance on how often your financials should be reviewed and what should be looked for. They should be able to help you identify trends and areas of the business where improvements can be made to achieve the milestones, again, that are on the roadmap towards your goals. And so finally, a good CPA will offer ideas and solutions where appropriate along your business journey. Our CPA relationship should not be that of a historian. They should be one that is working alongside us as a strategic partner, as that trusted expert to help us reach our goals, help us interpret the story of the numbers and how to best be tax efficient, utilize the numbers, project them out. So then again, we're making well-informed decisions with clarity and confidence. And so how often should you review your financials? Completely depends on how big your business are, what you want, how big your business is, what you want out of it, and what your goals are, how aggressive you are. My personal opinion is you should be reviewing your financials at least monthly and evaluating them against your cash flow plan and your budget. Now, if you're running on a much tighter budget and your cash flow plan is really narrow, I'd be reviewing that even more often, because something as simple as looking at your cash flow forecast on payroll week can help you decide what bills to pay before or after payroll is run. And then you end up avoiding some unhappy employees if their payroll bounced or if your checking account bounced. And so there's value to not just seeing the numbers, but to working the numbers and having it help you make decisions about something as simple as when to pay bills. Now, question number 9, what type of insurance should my business have? And this is in the section of insurance and KPIs, key performance indicators. So what type of insurance? Having the right type of insurance is important to protect both the business and you, the business owner. Remember, you're two separate entities. The CPA can provide advice on the type and amount of insurance needed to make sure you and your business are protected. And then final question, question number 10, especially important for those that are looking to grow their business. What key performance indicators, KPIs, should I be monitoring for my business? Small businesses have to set clear KPIs and track a wide variety of metrics to excel in today's turbulent environment. The statistics around startups are scary. 20% fail within the first year, 50% have failed by year 5, and then of those that do survive, 60% are breaking even or losing money. We cannot leave our business's success up to chance, and that means having clear goals, KPIs, and reviewing them frequently. Without insights, companies have no true sense of how they're progressing towards their goals and whether they're financially healthy or digging themselves into deep holes. Your CPA will be able to help you educate on the what, why, and how behind these critical success factors for your business. Now, some of the key metrics that business owners should understand and track include revenue, expenses, net income, cash flow, working capital, budget versus actual, AR and AP aging, average customer acquisition cost, gross profit margin ratios, quick ratios, cash burn rate. These are all just the basics that your CPA can be helping you with. And it can really ease your mind to have someone that's in your corner, someone that you can really bounce ideas off of, because oftentimes in business, we're alone. And having a strategic partner really, there's so much value in it. I can't even begin to describe how nice it is to not feel alone in business sometimes and to have an expert in your corner. So this is a little bit of a longer episode today, but those are 10 questions you should be asking your CPA and why, and those will help you set a tax efficient and good foundation for your business. Thanks for tuning in.